Hello everyone. Thank you for joining Capex update call. So starting with the fund summary, uh, the total fund size of this fund is 20 in INR terms. It is 27.6 billion, and as on 31st March 25, fund is 102% committed and 95% disbursed. And as on 31st, as per the 31st March 25 update, which we have shared with all the investors, the fund is projecting gross IRR of 19.01% in INR terms against the target returns of 17%. And we are projecting fund is projecting gross multiple of 1.42 times. Further, as on March 25, fund net DPI is 0.96, and by June 25, as on June 25, it is expected to be 1.05. And plus, we have given the projected net DPI till December 25 in this summary. Can we move to next page? Yeah. As on 31st March 25, the fund has made total 14 investments, out of which till 31st March 25, we have fund has exited from 6 investment. And recently in the month of May, as on 20th of May, fund has exited investment number 9. Can you highlight?
Yeah.
Yeah. Fund has recently exited investment number 9, which is with Inspira Group. And fund has achieved the IRR of 22.9% from this investment and MOIC of 1.5 times. So in terms of performance, out of active 6 investments, there is no concerns in any of the investment in terms of performance, except in Sunbeam, there is minor cash flow mismatch, which as per the current progress and as per the current development, it is expected to be mitigated in next 2 quarters. So can we move to investment by investment summary, or we can discuss in this summary? If you have any questions, please.
Okay.
All good. Yeah.
Let's move.
Yeah. So first investment is with Kumar Group. This project is located in Pune, and it's a residential apartment project. And the project has total 5 towers, 4 sales towers, and 1 EWS tower. Out of 4 towers, currently 3 towers are launched, and again in EWS tower also allotment has started, and the developer is managed to sell almost 1.2 times of the the developer is able to achieve sales more than the underwriting. Manish, can you highlight so as on 31st March 25, the developer has sold 1.1 million square feet of the area against the underwritten area of 0.7 million square feet. And in terms of collections, the developer is able to achieve higher collection than what we have underwritten.
So on this particular project has done far better than what we underwrote. So no concerns at all. In fact, developer is looking to refinance us from this particular project. He has indicated his keenness just to take us out. That discussion is on. So it is likely that we'll end up exiting this pretty soon.
Second investment is with SS Group. This project is located in Gurugram. The fund has total invested 1 billion INR 1 billion in this project, out of which current outstanding is 833 million. And the fund currently the project is under construction stage, and it is expected to be launched by December 25. However, the developer is infusing funds from their own sources and managing the construction work, and as well as principal payments and interest payments.
So no concerns on this investment as well. While project is progressing a bit slower than anticipated, but developer is continuously pumping in more equity.
So this is the current progress picture of the project. So if you can see, facade work is in progress, and it is expected by next quarter. Project will get the OC as well, occupancy certificate. A third investment is with Inspira Group. This project is located in Bangalore,
We have already exited this.
One series we have exited, and
Yeah.
we are still invested in second series of this in this project, and it's a plotted residential apartment, and as well as it's a plotted residential project as well as apartment development, and currently only plotted development has been launched, and from the cash flows of the plotted development, the developer has managed to repay the series one investment of the fund. If you can, Manish, can you highlight? Yeah. So, if the developer has sold 1.47 times of the area which we have underwritten till March 2025, and collection is also 1.6 times of the total underwritten collection amount. So, from the project cash flows, they were able to repay the series one of the investment. And again, with respect to series two, we don't see any concern here. Yeah.
Just one question on Inspira, which is there.
Yeah.
The title sheet actually is a number in the title sheet, right? Because it says that we have invested 2,350 crores in the first project, and we have got distribution of about 1,769 and outstanding of 1,585. Is it because of the tenure, or is it because of the?
Manish, can you come to summary sheet?
Yeah.
Am I reading it right? Or?
Yeah, so basically we have invested INR 2,350 million in this project, and as on 31st March, the total distribution received from this investment is 1.7 INR billion. So, so this exit happened in 20th of May. So I think the distribution you are looking at is updated till 31st March. So once you will receive the June updated report, so this number will get updated.
Okay, the distribution includes the element of outstanding which is there.
No, sorry. So
because it doesn't match up, that's the only thing. It's more of a arithmetical check.
No, so basically in distribution received, principal as well as interest amount is included.
Got it.
Yeah.
The outstanding also includes is the future amortized interest portion or nothing, right? It's only the principal.
No, in the outstanding, it's only principal outstanding only.
Okay.
Yeah.
So the distributions are including the interest repayments, interest payments, and outstanding is excluding any future.
Excluding all this.
Yeah.
So in case of only one project, which is serial number 12, Adrika Dosti project, 3.3 billion of the outstanding amount includes the accrued interest. Otherwise, rest of the investment.
Outstanding is what is outstanding as of that cutoff date.
Yeah.
It doesn't take in account anything which is expected in future in terms of accrual. So that is how it is captured. Does that clarify the question?
Yes, I'm more looking at saying that. So total pay. My own query was more in terms saying it is 235 crores which has been given in, but we've already received 176 crores, which is there. There is a further outstanding of 158 crores.
Correct.
So either the tenure is longer for this or.
So straight mathematics, Harish, is we are expecting to make about 1.5 multiple on this. Half of the capital has already come, half is going to come.
Okay, got it.
Right. So the reason question is arising is because this particular investment is paying us higher return than other investments.
That's it.
So that's the reason numbers are looking little different than usual.
Yeah.
So in June, actually 9th will become fully exited. So they would be all recovered and 0 to be recovered, at least on the series 9, which is the first series that we did with Inspira. So we are pretty happy with the progress of the project. All the money that we have received from exit perspective, it is just from cash flows. No element of refinancing. That means series 2 will now enjoy the full security.
Okay.
Let's come to Sandeep.
Yeah.
So this investment is located in this project is located in Mumbai, and the fund has committed 1.3 billion, and against that fund has already invested 875 million, and current outstanding is 656 million. The principal is fully repaid till March 25. However, as we have mentioned in our previous updates call, in October 2024, we have taken IC approval for extension of principal moratorium of this investment by 9 months. That is the tenure, and also we have extended the tenure of this investment from 48 months to 57 months, because we were anticipating some cash flow mismatch in between period, because the sales of this project has been commenced 6 months late due to various designing changes and plus approvals, delay in approvals. So currently, developer has between October 24 to March 25, the developer has not availed the that extension, and they have paid the principal amount till March 25. However, from April 25, fund has granted the moratorium to the developer, and we are anticipating in next 6 months, the in terms of sales and in terms of collection, the progress will be fine, since now the building has come above the ground level, and also recently they have got the completion of the fourth slab, and they are expecting slab by 12 to 15 days cycle. So within 6 months, we will see the traction in the project and in the sales. And also recently, the developer has launched the upper floor of this investment, this project. So just to give you the background, till March 25, only 32 floors of the project was launched out of 37. Now recently they have launched the 33 to 37 floors, which comprises of total 48,000 square feet of saleable carpet area. So, and as per them, as per the market study, we are expecting higher selling price for those upper floors. So, in terms of that, we are anticipating in next since 6 months, this problem will get resolved.
And what about the balance amount, which is the committed amount? Are we still planning to disperse that, or there is what is invested is what is committed?
So Harish, so far we are just keeping a very close eye on the progress in development. If required in the project, we'll just consider whether we need to put in more capital or not. So that's not a determination that we have done. What we have also done, apart from making sure this project is progressing, promoter has put in close to about 50 million rupees already from its own sources as additional equity contribution in the project. We are expecting promoter to put in another 50 million rupees in the project. Right? We will track how the project is progressing. Now that as Ben just kind of shared, the project is already out of ground. We expect that structure to be visible very soon, in just about a quarter or so. And as well as higher floor inventory has now been opened. So combination of these events and actions, we expect cash flows to improve. Right? If at all we determine that there's a need to pump in additional capital, we will take that decision at that time.
But that is still on the cards, which is there. So it is not that we have decided to stop our investment at whatever we have dispersed.
No, that decision we have not taken. That determination we have not done as yet, because the only trouble that we are facing in this particular project is delay or mismatch in cash flows, and primarily because there was a delay at the start itself because of delayed approval. From a value perspective, we don't believe that value has been impaired.
Okay.
Right. So from LTV standpoint, it is still comfortable. We would like to support this particular project towards successful conclusion so far. But of course, we are seeing strong commitment from the promoter, wherein he is getting additional cash flows and pumping as equity.
And how is the velocity of sales for this particular project, which is there? Given with all these delays, do you see any challenges on sale completion or the challenge of being able to sell during the construction period?
So in recent 2 quarters, the average sales velocity was 11,000 per quarter. However, we are expecting this will get improved in next 2 quarters. They will be able to achieve somewhere between 15,000 per quarter, 15,000 square feet per quarter to 20,000 square feet per quarter of sales.
So Harish, just to put things in perspective, right? This particular development is G plus 37 stories. Project is today at G plus 4 at best, right? That means we have to, this project still has to go 32 stories more in terms of structure completion and as well as finishing. The project has been able to sell half of the inventory already, right? So there's no huge concern that this inventory is unsaleable or it is going to face a lot of trouble. It is just about it got delayed.
Okay, because the price in which they have been offering it for is at least a 10% discount than the underwriting price. And at least my understanding was always underwriting price is always a conservative number. That's the reason why I'm just asking this question. Is that the sales an outcome of price reduction which has been coming out?
Sure, your observation question is very valid. So this is the only project which has actually underperformed from an underwriting perspective. Now some of the this particular project went through some of the challenges because of delays, and therefore they had to just take an aggressive pricing strategy as well, right? In terms of getting that traction. Now the promoter is a little more confident, given that particular project from an excavation and going down and coming above plane, that has already happened. So that is always the little more tricky period in terms of showcasing the progress to external audience. So that hard bit is done. Now we are just putting up slabs on top. As Mayank said, what is the slab cycle, Mayank?
It will be between 12 to 15 days.
So now given slab cycles are expected to be still at just 15 days, that means 2 slab a month. In next 3 months, project is expected to add another 6 floors on top of 4. We are expecting this particular project to be more visible from outside.
And also, just to give one more perspective, between April 24 to March 25, I would say December 24, the developer was targeting to push the sales of 1 BHK units, which were also the direction, I mean to say preferred, it was not preferred location units. So just to push the sales of these units, they were offering lower pricing. However, from June 25, we are expecting that they will achieve the higher price. Given the terms that they have launched the upper floors and even their 1 BHK units has been moved, they have almost achieved the sales of almost 80% of the total area of the 1 BHK units.
Yeah, so this is on Sunbeam, but of course this is the only investment which is lagging behind what we underwrote. Hence, the team is very focused on what are the steps we need to take on continuous basis in terms of making sure this project is progressing well. Happy to take any other question on Sunbeam.
Yeah, so just to understand this better, the IRR, expected IRR, which is reflected in the summary table, has that been adjusted for the mismatch, which, are not mismatch, but let's say the difference in the sale price, which is there, right? I mean, in the summary table, I don't know if what is the current IRR which is being shown and the expected.
20.4%.
Okay.
So we are not. Sorry, just to preempt your question, we are not anticipating at this stage any impairment in any recovery that we can make.
Okay.
Right. So whatever contracted return we have with the counterparty for this particular project, we are expecting that to be honored in full.
Okay.
Right. So there's
despite
no
the project being despite the project being slow, both in terms of completion as well as because even the sale price or the unit price of the sales is also lower than what it was underwritten.
So that is getting reflected in MOI. If at all you'll just notice on the right hand side table, what was underwritten was 1.4 multiple. Because of delay, we are expecting that multiple to turn out to be 1.5.
Sorry, much more an arithmetical question, which is that what will be the impact of say change in period versus what is the impact of say moratorium period increasing for something, and what will be the impact of interest rate changes if I have to ask something? Just more to say, was the interest rate reset because of a delay or failure from their end, which is there?
Harish,
Sorry, it's not.
yeah, so there are a couple of things on this project. In terms of the delay, there was a change in the underwritten area as well. We had
Okay.
initially underwritten 0.16 million. The area went up to 0.195 million.
Yes,
So
saw
that
that.
was
Noticed
a
that.
yeah, so that was a small positive impact on the project. And to
Hmm.
achieve that additional 30,000 odd square feet carpet area, the developer was happy to, not happy, but he took a trade-off to delay the project by 6 months. So to come back to your question, in terms of our project economics, the absolute interest component of the project increases in terms of cost because our loan will clock for longer period. That is why
Yes.
the MOIC improves. In terms of the IRR, there is no change in the contracted rate like Sonu explained. In terms of what the developer takes home, which is the buffer, so like you guys are seeing and what the team had explained earlier, the developer has already infused 50 million rupees his own personal equity in the last 6 months, and we expect another 50 million rupees to come through in the next 3 to 4 months. That is why the LTVs are still not very badly impacted. Where we entered at 59.5 and today also it is a reasonably moderate LTV of 62.7, nothing to fret about.
Okay.
The investment might last for a longer period than what we had thought about, but in terms of economics to the fund, there will not be a material change apart from a slightly higher MOIC.
Okay, got it. So which means that this is more of a moratorium change and an impact on MOIC and IRR because of this, and not actually a change in terms of rates or any other
No.
such clauses. Okay, got it.
That is right.
We'll move to the next one.
Yeah, so this investment is with Adrika Developers. This is the Dosti Group, and the total commitment amount of this investment is 4 billion, and out of which the fund has invested 2.875 billion, and current outstanding is 3.3 billion, including the accrued interest. The interest payment has been started of this investment from 30th June. However, the accrued interest has to be paid in the multiple installment till the end of the tenure. So that is why the accrued interest is included in the outstanding amount. As on 31st March 25, the developer has sold almost 1.3 million square feet of area out of the underwritten area of 1.6 million square feet. If you will see the sales velocity between July 24 to March 25, the sales velocity has been increased from 0.1 million square feet to 0.1 million square feet to 0.13 million, and even recently they have clocked the velocity of 1.16 million square feet. So it is expected in next 2 to 3 quarters they will be able to achieve our underwritten sales velocity. And in terms of average selling rate, they have achieved the higher selling rate from what we have underwritten.
Just one query on this particular thing is, till what time can they draw down the balance amount which is there? Is there any tenure which is attached to that?
So in the month
This is
of
more in
April,
terms
yeah, Manish, can you go to summary sheet? Yeah, so in the month of April, no, not summary, means, yeah. So in the month of April, the developer has drawn down INR 250 million, and in future we are not expecting any further drawdown.
Which was given out of the reinvestment portion.
Yeah. So this INR 250 million we have invested from the drawdown receipt from the other investment.
reinvestments. So there is no
Yeah.
further drawdown which we expect from.
Yeah.
Got it.
There may be no further capital called from LPs. There may be certain instances of reinvestments happening since the counterpart is a reasonably known name in the industry. So we are otherwise okay to look at further deployment subject to governance payment.
So we don't see any concern in this investment. Happy to take if any questions if you have.
Nothing from my end.
Okay, we'll move.
Uh,
Yeah, sorry.
No, I think there was the area, I mean, there was a note in the previous slide saying that
Yeah.
I think versus the original underwriting, the overall project potential is more than what was approved, right?
Yeah, so current approved area is 1 point.
This is on Adrika or Sunbeam?
Adrika.
So the developer has current approval up to 2.2 million square feet of area. Further, with the TDR policy, which is expected to come in next 8 to 9 months, the area will increase to 4.5 million square feet.
So there is a lot of supply available in the project as per phases.
Yeah.
As per the first point on the tab in the left. So we do not envisage to stay in the project till that long. The developer is more economics conscious. So we had entered when the project was at a much earlier stage. Today, with the advancement of construction, sales and approvals, there is an instance that we may see ourselves getting refinanced. To be clear, in terms of project economics displayed on the right hand side, first quadrant on the right hand side, lower side, we had expected a IRR multiple, which is lower than what we have already or we are already looking to achieve. That is, we were expecting us to be refinanced earlier, but we have engaged and tried to extend our stay in the project.
Okay, got it.
So our sixth investment is with the VGN Group. This investment is located in Chennai, and total commitment amount of this investment is 1.7 billion, out of which our current outstanding is only 612 million, and it's a plotted development project. And currently, in terms of value, I will not talk. I'm not talking about the area in area terms, not in average selling rate. In terms of sales value, the developer is able to achieve 1.27 times of the sales value than what we have underwritten. And in terms of collection also, they are able to achieve 1.26 times of the underwritten collections. So in overall performance terms, they are ahead of our underwriting, and we don't see any concern here.
Next.
So seventh investment is with the VGN Group, again with the VGN Group. This is also a plotted development project located in Chennai. The fund has committed 1.1 billion, out of which current outstanding is 580 million. And again, in terms of sales value, the developer is able to achieve 1.5 times of the sales value than what we have underwritten. And in terms, since outstanding is only 512 million, we are expecting that they will be able to repay us from the project cash flows by December 25 or maximum by March 26.
And both VGN deals are cross collateralized. Both the projects have done far better than the underwriting price. And in terms of collection as well, it is ahead of underwriting, and therefore it has paid down our outstanding much faster than what we anticipated.
Yeah.
In fact, to extend our stay in these projects, all the three projects, we have from time to time engaged with the counterparty to offer them cash outs out of the escrow flows beyond what has been contracted, so that our money or our investment clocks for a slightly longer period.
So this is the full summary of the investment that the fund is now holding. Come back to the summary page.
Yes.
So a quick summary out of 14, 7 as of May, 7 investment has been fully divested. The remaining 7, other than Sunbeam, rest of the projects are doing pretty well. Sunbeam, we are taking steps in terms of making sure it is going to just catch up on the progress that we underwrote. So that is a quick summary. The fund has already achieved close to 1 DPI. So principal has been paid back. Now fund is going to harvest the returns that we need to pay back to the fund investors. So that is a quick summary. Happy to take any questions that you may have.
Is there a form of estimate which the net DPI which you were more of estimate on payouts which are there, except I think Sunbeam and a portion of I think Inspira also is paid on time, except Sunbeam and Adrika. The rest of them are ahead of their schedule in terms of payment which is there.
Yes.
Yes.
And at the pace and velocity are expected to complete over the next 12 months. Is my assessment right about it, or is there some other challenges to not
Uh,
notice for?
So see, if at all we go in investment by investment, Kumar, which is investment 7, we have already received indication from developer to refinance at South. So this we believe should be out in this quarter.
Okay.
SS Group, not much of outstanding is there compared to the other cash flows that group is holding. We can get repaid the day we decide that we want to get repaid. We are just trying to hold on and demotivate the promoters to just pay us out.
So that we can make the better MOIC.
So this one will get paid out. This would be a little longer from a tenure perspective compared to other investments. We are trying to just hold on to the this investment. Inspira 9 is paid out. 10 should get paid out sooner than anticipated. Sunbeam is likely to take its course a little longer than what we anticipated. We have already spoken about. Adrika, we are trying to hold our fort with client in terms of not getting refinanced sooner so that we can make better MOIC. PGN, only residual outstanding is there by December. At best, by March next year, we'll get repaid. So you're right. Other than Sunbeam, all the investments practically can be monetized very, very soon in next maybe 2 or 3 quarters.
Okay, so that's the assessment more to say that it's one is to can it be liquidated, but will it likely to get liquidated seems to be more high for the next 24 months or next 12 months, except for one.
Except for Sunbeam.
Yes.
Even in Sunbeam, promoters are looking to refinance us out. They are having a lot of discussions on refinancing, but as of now, we are not taking refinancing as a case in our mind at all for time being. So yes, in next 12 months, we'll see the simple monetization of remaining 7 investment as well in the fund.
So that's it from my end.
So
we are Sridhar, Laurel, any questions from her?
No, Harish, we're good.
Perfect. So I think we'll, in that case, we'll just close this call just with a quick remark. Thanks so much for showing confidence in us in the midst of COVID. This fund is COVID fund series for us, and it has done far better than what we guided and anticipated. So thanks so much.
Thank you so much.
Looking forward to interact again in next quarter. Thank you.
Thank you.
Thanks. Bye-bye.
Thank you.
Thanks. Bye.